You know, there is something almost meditative about the supply chain. We go to a restaurant, we order the steak, the salad, the fries, and we never really think about the invisible hands moving those boxes behind the scenes. It feels static, boring even. But looking at the data we have today, specifically regarding Sysco Corporation, boring is the last word I would use. The sentiment signals are flashing red. Well, actually, they are flashing bright green. It feels like something shifted in the bedrock of the market today.
It absolutely has. And you're right. Usually when we talk about food distributors, we are talking about defensive plays, safe places to park money when the world is on fire. But the sentiment analysis we are looking at today for Sysco, ticker symbol SYY, paints a completely different picture. We aren't just seeing safety. We are seeing aggression. We are seeing a company that is suddenly behaving like a growth stock. The overall sentiment synthesis is strongly positive. And honestly, the confidence level is incredibly high.
That is the part that caught my eye. You usually see this kind of hype around tech stocks or biotech breakouts. But a food distributor? So let's peel this back. What is the core engine driving this sudden burst of optimism? Because the report mentions a strong sentiment strength. What happened?
The North Star here, the absolute center of this sentiment shift, is the mid-February update, where Sysco raised their fiscal year 2026 EPS guidance. Now, let's pause on that for a second. In this macro environment, with inflation still lurking and consumer spending getting squeezed, most companies are lowering the bar. They are hedging. They are saying, hey, expect less so we can beat it later. Sysco did the opposite. They looked at the market and said, we are going to make more money than you thought.
That is a bold move. It's almost arrogant, but in a professional way.
It's confidence. Pure, unfiltered, operational confidence. And the market sentiment reacted instantly. We saw a nearly 10% surge in the stock price in a single day. But here is the nuance that the sentiment analysis picked up on. It wasn't just a price jump. It was a quality jump. The report highlights that this optimism is driven by volume gains.
Right. And I want to dig into that because that feels like a critical distinction. Usually, when grocery or food companies make more money lately, it's because they raised prices, right? They just passed the inflation cost to us. But you're saying the sentiment here is different?
Exactly. That is why the sentiment is so bullish. If you just raise prices, eventually the customer walks away. That's low-quality growth. But Sysco is reporting volume gains. That means they are actually moving more physical boxes of food. They are taking market share. The sentiment analysis emphasizes that this proves revenue isn't just inflation-driven, it's unit-driven. That is the holy grail for consumer staples right now.
So, they aren't just charging more, they are selling more. That explains why the analysts are scrambling. I saw Wells Fargo mentioned in the report. What is the institutional sentiment looking like? Because usually, the big banks are slow to turn the ship.
They turned fast on this one. Wells Fargo hiked their price target to $100. That is a significant psychological barrier. They maintained an overweight rating. When you combine a guidance raise from the company with a price target hike from a major institution like Wells Fargo, you get what the report calls information consensus. It's rare to see the company insiders and the external skeptics agreeing so completely. The sentiment alignment is sitting at about 85%.
85% alignment is massive. It feels like everyone is looking at the same chart and nodding. But let me play the cynic for a moment. When everyone agrees, I get nervous. Is this just a momentum trade? Is everyone just piling in because the stock is going up?
That's the fascinating part. The analysis from the U.S. Stock Picker podcast suggests this is a hybrid situation. Sysco is currently hitting a sweet spot. It has the momentum characteristics because of that breakout to a 52-week high, but it still retains value scores. It's a defensive stock that is sprinting. The report explicitly mentions that Sysco is successfully navigating the macro environment better than its peers. So it's not just hype, it's a flight to quality.
a defensive stock that sprints. That is a great image. It's like seeing a linebacker run a 4-minute mile.
Laughs. That is actually a perfect analogy. And to add to that athleticism, look at their strategic moves. The report flagged a moderate positive sentiment around their Homegrown by Sysco pilot program.
I saw that. Homegrown. It sounds quaint, almost artisanal. Why does a massive corporate giant care about farm to table? Is that just marketing fluff, or is there real sentiment value there?
It's easy to dismiss it as greenwashing or marketing, but the sentiment analysis treats it as a strategic margin play. They are expanding into locally sourced products in the US and Canada. This targets the farm-to-table institutional market, which is high margin. It shows that management isn't just sitting back relying on their scale. They are hunting for niches. It tells investors that the giant can still be nimble.
So they are locking down the high-end restaurants too, not just the school cafeterias.
Precisely. And that diversity of revenue streams is why the sentiment remains so robust, even when we look for negatives.
Speaking of negatives, surely there has to be a crack in the armor. I'm looking at the report and it says, significant negatives, none identified. That makes me suspicious. Nothing?
It is incredibly clean. The only negative sentiment found was some institutional trimming. ABN AMRO reduced its stake by about 28%, but the analysis contextualizes this perfectly. When a stock hits a 52-week high, funds sell a little bit to take profits. It's portfolio rebalancing, not a vote of no confidence. It's like cleaning out your garage. You aren't moving house, you're just tidying up.
Right. So the selling is administrative, not fundamental.
And the buying is fundamental. We saw Candrium SCA increase their position by almost 44% before the guidance raise. That's the smart money getting in early. The sentiment weighting here is heavily tilted toward the future outlook, the guidance and the price targets, rather than the backward-looking sales.
It is interesting you mention the future outlook. It makes me think about the broader economy. If the sentiment on a food distributor is this strong, does it tell us something about the resilience of the consumer? Or is Sysco just eating everyone else's lunch?
I think it's a bit of both, but mostly the latter. The critical developments section notes that Sysco is gaining market share. In a tough economy, the big get bigger. The small regional distributors struggle with fuel costs, labor shortages, and inflation. Sysco has the scale to absorb that. So, the bullish sentiment is really a bet on consolidation. It's a bet that in a difficult world, efficiency wins.
Efficiency wins. That is a cold, hard truth. It brings up a philosophical point, doesn't it? We cheer for the Homegrown initiative, but ultimately, we are investing in the consolidation of the food supply into fewer, stronger hands. The sentiment is positive for the stock, clearly. But it does make you wonder about the landscape of the industry 5 or 10 years from now.
That is the deep question. The value and momentum scores suggest investors aren't worried about the philosophy right now. They are worried about returns. And right now, Sysco is offering a rare combination: stability and growth. The report calls it a high-conviction bullish case. When you have management signaling profitability and analysts raising the ceiling to $100, the path of least resistance is up.
It really does seem like the perfect storm, in a good way. You have the fundamental North Star of earnings, the technical breakout, and the institutional backing. Before we wrap this up, I want to circle back to that $100 price target. That is a double-digit upside from where we were. If you had to summarize the emotion of this data in one word, what would it be?
Validation.
Validation?
Yes. For a long time, Sysco was just the safe, boring choice. This sentiment report is validation that their strategy of cost-cutting, efficiency, and targeted expansion is actually working. The market is finally saying, okay, we believe you. The skepticism is gone, the confidence is high.
And that validation translates into momentum. It is a fascinating case study in how quickly sentiment can shift from hold to aggressive buy on the back of a single strong earnings signal.
Absolutely. And for anyone listening who thinks food distribution is too dull for their portfolio, this report is a wake-up call. The boring stocks are where the real action is right now.
Well, I certainly won't look at a Sysco truck on the highway the same way again. It's not just carrying vegetables, it's carrying a massive amount of market optimism. We have covered the guidance, the volume gains, the homegrown strategy, and the lack of any real negative signals. It seems the table is set for Sysco.
The table is set and dinner is served. The indicators are aligned.
As we close out, I want to leave our listeners with this thought. We often chase the next big AI trend or the next tech explosion, but sometimes the biggest opportunities are hiding in plain sight in the companies that simply keep the world running. If Sysco can pivot this effectively in a high inflation world, who else are we overlooking?
That's the question to ask. Don't just look at the flash, look at the fundamentals.
Exactly. Thank you for breaking down this report with us. It's been an eye-opener.
My pleasure.
And for everyone listening, if you want to understand the market, you have to look beneath the price action. You have to understand the why. That is where the edge is. If you found value in this deep dive, make sure you are paying attention to the signals we discussed. Specifically, I want you to go look at the news sentiment analysis for your own portfolio. Don't just read the headlines, read the mood of the market. That is where the money moves first. Thanks for listening to the U.S. Stock Picker Podcast. We will catch you on the next one.
Clickbait video title, Sysco to $100. Why smart money is loading up on this boring stock.
Disclaimer. The information provided here and on this channel is for general informational and for education purposes only. It does not constitute investment advice, financial advice, trading advice, or any other sort of advice. We make no recommendations regarding investment decisions based on this information. You are solely responsible for your investments. Please conduct your own research and consult qualified financial advisors before any investing.